let's look at Dave & Buster's Entertainment. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. Okay, we had a pretty big bullish day in the market yesterday, especially the Nasdaq had a huge move, reaching for 4%. Let's now go to one of the economic signal themes. So I have, two interesting themes here, femininity and masculinity. You see that the femininity theme is actually outperforming. We will look at masculinity. So these stocks, these companies, they, a very significant portion of their customers are male. So that is, the essence behind this theme. So in this video, we are looking at Dave & Buster's. They have like a dining bar gaming thing. Extreme performance from the 52-week low. But even though the market had a roar yesterday, Dave & Buster's didn't get a bid. So let's analyze this company. If we go here to their website, this is the reason why I see this is because I live in Europe. So there are these GDPR rules. They're really, given that, Dave & Buster's is, a publicly traded company, there's no excuse for them not revisioning their website such that international investors can have a look at their website. So there's no excuse for this, basically. Okay, let's look at the seasonality of play, which is the ticker. It's a good ticker, for sure. I do like a good ticker. Okay, let's get as many years as possible, like that. Okay, so here we do have the seasonality. You see that March actually is one of the weaker months. April is very strong, closing higher 83% of the time, so that is certainly a pretty decent seasonality. If we go here to the charts, like this, so this is all the history we have for Dave & Buster's. Weekly data points, and you can see that here is the lockdown crash, and we have had a pretty significant recovery. Huge, okay. And a lot is priced in at this point. A lot. If looking here at the RSI, it is pretty darn extreme. I think this is almost, a record throughout the entire time this stock has been public. So extreme RSI. We do actually see here that there is a bit of a bearish divergence here on, a slight bearish divergence here on the accumulation distribution. So the volume is not fully corroborating this rally, this attempted breakout. Looking at the correlation, there's a minus 35% negative with the S&P 500. Looking here at the daily data points. We are so close to basically getting to where we were before the big crash. Okay, looking here at RSI, it is a pretty elevated level. On the daily data points, the stock is able to be more overbought historically. When we look here at the PPO, which is the distance between price and the 200-day moving average, this is basically a record. So basically, from a technical standpoint, we are very overextended. Very much so. There's a 94% positive correlation here on the daily data points. And this is looking back in 156 days. Which means that when we look at the weekly data points, we're looking at the last 3 years. Okay, like that. If we go here to Finviz, we are above this trend channel. So we have a bit of we have this theme of excess coming back here as well. I do like to look at the analyst price target. So if you look at the average analyst price target vis-a-vis the current price, and you can see here that there are quite a few companies covering Dave & Buster's, then we see that they suggest a minus 27% downside. When we go to Saks.com, they have a number 3 hold, but they have a D value score and F growth. Hence, and also the industry rank here for restaurants is in the bottom 15%, and there's no dividend. So basically, this stock has gone up a lot. So looking at The theme is, it's a bit of an economic signals theme, so it needs to be interpreted in a different way. But looking at the charts, it's pretty clear. It's just this is a high risk situation for bulls, basically. Looking at the seasonality, it's mixed, because we did see that April is extremely strong, but the seasonality means that it closes higher than it opened, so it doesn't mean that there's going to be like a big move. And given that we have seen a big move so far, arguably a lot is priced in. Looking at the fundamentals, that was a very clear picture, both when it comes to analyst price targets and when it comes to Sachs. They think that it is basically, pretty overvalued. And the reason why it is important to look at multiple things, not simply the chart, but also look at the fundamentals, look at seasonality and all of that, is because a good bearish trade is a trade where there's a lower probability of new money flowing in. Hence, if the technicals and the seasonality and the fundamentals are bearish, then there's a bunch of inflow of money that is going to be limited, because anyone who looks at analyst price target, who is really into that, they are not going to buy dividend busters at these levels. Anyone who is a fundamental analyst who look at value scores, they are not going to buy a D value stock. A growth investor is not going to buy an F growth stock. A technical investor who is worried about overbought levels is not going to look at this and be like, oh, okay, I'm going to buy this. I mean, obviously they are going to be spooked by 82 weekly RSI. So the only ones that kind of have a bit of a love here. But that is for April, though. That's not for March, because March is actually pretty weak. For April, the seasonality fans, they of course have something for April, but then again, May is mediocre. So April is stuck between two, helter-skelter months. The best seasonality, arguably, for Dave & Buster's is October, November, and December, because then it is 71% of the time for those 3 months. Okay. Let's quickly now look at the S&P 500. Like that, look at the SPY. There's been a lot of talk about, crash in the market, but looking at the SPY, we have nothing close to a crash. We are testing resistance here at the 20-day moving average, but I think we are due a correction, but we haven't really had that on the SPY. Looking at, the diamonds here, close to breakout. Here again, there's nothing dramatic happening. The only thing that is a bit close to, a more sizable correction, that would be, the Nasdaq, which has seen a pretty big pullback. For the first time since this sea plunge, we actually broke below here, significantly below, the blue 100-day moving average. So Nasdaq is certainly weaker, but it has been also the ones that it's been massively outperforming the S&P 500 and the Dow Jones, which ties into this whole logic of why it is prudent to buy low and sell high, because at some point it becomes a big risk. That's the thing. Okay, it's very bullish, but when there is a pullback, it is very sizable. Okay, whatever you do, of course, you want to be, careful in this market, because there are bubbles out there. There's quite a few bubbles actually. Hence, there's a very high probability of risk going forward. The best way to mitigate risk is to have a market-neutral portfolio. And when I talk about market neutrality, you definitively want to use this indicator here, which you can get for free through investing.com. That is the statistical correlation. And, you can do it even more advanced. I have this thing here as an example, where I have correlations, and I have set it up such that I can look at correlations between, let's say, the S&P 500 and a bunch of different, like the wicks here and the bond market and so on and so forth. Back to Dave & Buster's. Okay, long-term looking years into the future, I am bullish on this company, but looking at the coming weeks and months, there's reason to expect a pullback.